Hey gang, Akil Stokes here, head currency trader, six-figure syndicate, contributor, live room moderator, and 12-week transformation course coach at Trade Empowered, and welcome to my weekend review. In today's video, I'm going to discuss the importance of sticking with a trade, staying with a trade idea, and also I'm going to give you guys an update on, basically how the first month has been since I made that major change in my trading, as well as point out what my biggest flaw as a trader is. So whatever you have to do, whatever you're doing at the same time as this video, pause the tape, get it done, come back, and make sure you watch this with your full attention, all right? All right, guys, welcome back again. Thank you, as always, for joining me for one of my videos. I just got off the golf course, and, well, every time I play around, every time I go to the range or anything, I always think about the many comparisons between golf and trading. And some of the most important ones is obviously consistency. I see that all the time, or lack thereof, all the time in my golf game, where I can do things very good for bits and spaces, and then it just goes south pretty quick. But also persistence. And one of the things that really caught my attention today, which kind of goes right into the topic of this week's video, is, in golf, I used to always think that, I had to have that monster drive. I used to be that guy that can drive it 300 yards, and I thought that was it. If I can have the monster drive, I'd be that birdie golf player, and I'd be great. Unfortunately, I can drive it 300 yards, but it's 300 left, 300 right, and never straight. And what happens is I end up leaving myself a second shot that is worse than if I would have just, hit an iron up there about 100 and something yards and just, slowly played my way up. But how that relates to trading is very similar. Trading, we don't always need to catch the big trade. If you can catch a handful of smaller trades, that worked the same as adding up to the big trade. And that's kind of what we did here this week on Euro New Zealand. Now, Euro New Zealand, I was looking for a big move earlier in the week, looking for a trend continuation opportunity. It didn't happen. I should say this. It did happen. I just missed the move. And, well, I stuck with the trade and still found a way to get involved in it. I'm going to show you guys that in a little bit. But actually, I'll show you that right now. This is going to be a flashback video from one of our syndicate videos earlier in the week, I think Monday or Tuesday, and then also a bit from our live room the day after I missed the trade. And then I'll come right back to and give you guys an update on how that went. Lastly is Euro New Zealand. I'm probably not going to go over this. Euro New Zealand, we talked about this in the live room on Friday. This is a trend continuation opportunity. I haven't had time to really break down this chart, so I'm not quite sure how I want to trade this, but the key thing I was looking for was this. We had our break and close below structure. The market has been breaking down, and then we came here and we essentially consolidated from the 12th until we broke out on the 26th. And now we got a lower low, lower close, a break below, close below. That's a signal to me of trend continuation. So what I'm looking for is a retracement back somewhere into this area. So the higher we get right here, the better the retracement is for me. So I'm going to pay close attention to the RSI, see where we get overbought at, and I'm going to take a look for a short opportunity where I can get stops right above this structure level. So if this comes all the way up to here, the better for me, because that's going to give me a risk of about this, and I can look for a reward shooting down to test these lows right here. If I'm an aggressive trader, I can look for an extension and a trend continuation. If you're a conservative trader, you can also throw some fibs and look for a Fibonacci level as well. There's tons of ways to do targets. The point is that the lower low, lower close signifies trend continuation. So right now I'm looking for this pullback. I'm looking for a reason to get short this trade. So we'll see if that happens either today or tomorrow. What didn't we take a look at? Euro yen is the last one. Oh man, I missed this one. I missed it, guys. You guys in the live room or the trading room yesterday, training room, talked about getting short this Euro New Zealand. For you guys that saw the syndicate video, I just missed this opportunity. 6 o'clock this morning. Yeah. What was I doing? I just must have not entered. Did we not? Oh, never mind. We didn't go. I didn't miss it. We didn't go overbought. That's it. Oh, we did go overbought. 80.15. Man. You know what? I must have, yeah. I must have looked at this and I must have thought we didn't go overbought here instead of actually measuring out with my data. We're at 80.15. I must have looked at it and say, it doesn't look like we went overbought. Well, that stinks. Oh, well. No use dwelling on the past. All right, so after I missed the initial opportunity on the Euro New Zealand, there was another opportunity to get involved, and this is why we have many trading techniques. I'm gonna see if I can find a chart here that I actually want to do this on. Let's just do this one. Let's go Euro New Zealand. I'm not sure if I was saying Euro Yen the whole time, but I meant Euro New Zealand if I was. But what happened is, here's the double top we missed, or the double top I missed. And well, if you guys remember, a few months ago, Jason did a presentation on YouTube teaching the 2618 technique. And the 2618 technique is, it's good for two reasons. It's a safety technique. If you're a very conservative trader, you want every bit of proof that the market's ready to turn around before putting your hard-earned money at risk. It's something you can use for that. It's also a technique for people like me that say, hey, I just missed the trade, or maybe it happened in the London session or the Asian session while you were asleep or away from the markets. And what happened here was, well, that very same thing. You remember the market came up, already went over, we were looking for the trend continuation to the downside. Market came up, we double topped up here, missed the trade, beating myself up. What we said, and I say we because a few of the live room members jumped on board with this as well, is we waited for the second opportunity, the next opportunity, which is a 2618. So we took our Fibonacci retracement tool, we drug it from the swing high to the swing low of our last move down, and we said, hey, we're going to enter right here, or we said this, if the market comes to the 618 retracement, then we enter using our 2618 technique, and we took profits right down here to retest of our structure lows. If you were a trader that were taking two targets, I'm only doing one target right now. Again, going back to that change I made about a month ago. But if you're a trader that's taking two targets, looks like you hit target 2 already as well. Looking at that 127, or maybe you're still holding as part of the bigger trend continuation move. So no, we didn't catch the really, really big move here in the market, but we still had an opportunity to grab about, I think it was about 50 pips out of here, what we got. Still had the opportunity to grab exactly 50 pips out of the market, where otherwise we would have been sitting back, beating ourselves up for missing the trade. So again, always stick with the trade, guys. It's important to just not give up and throw the chart away after you're done with something. And a really big part of that is having a consistent portfolio. I work with a lot of traders, and I've got traders out there that are watching 20 pairs, 25 pairs at a time, and they really don't even know what pairs they are. They essentially do this. They find a website, they get a big list of as many pairs as they can think of, and then when one pair doesn't have something, they just move on to the next, move on to the next, move on to the next. So aside from maybe a handful of pairs, there's no real consistency in what they're trading. They're poking and prodding and hunting for opportunities. And, that has its pros and cons, more cons than pros. But when you have a set portfolio, when you have a set routine in what pairs you follow, what happens is you start to know these pairs like the back of your hand. I don't know what that was. You start to know these pairs like the back of your hand, meaning you see them day in and day out, and in your mind, you're already ready for the next step. You know what Euro New Zealand's doing. Okay, you missed this opportunity, but this can happen next. And having that familiarity with those pairs allows you to catch these second and third chance opportunities when we get retracements within our bigger move. So I thought that was a topic I wanted to discuss this week because, again, I talked to a few traders that are coming through my training course, and they just seem to be all over the place. And in the long run, it's okay right now while you're not trading live and you're just trying to train your RAS, your reticular activated system, the CETA stuff. But once you start to manage your portfolio, that can start to get you into trouble. Speaking of portfolio, that's going to segue right into our, I told you I was going to discuss my biggest flaw as a trader. The biggest flaw in my trading, and let's get some stats first. It's been about a month since I made the major change in my trading, and happy to say that it's been a positive month. Now, it's been a little different. Typically, I separate my swing trading results from my day trading results, but because of the very, very, very small ATRs in the market, there really hasn't been much day trading, meaning that a lot of the patterns and opportunities that I used to get, I should say setups, not just patterns, but a lot of the setups and opportunities that I used to get on the day trading time frames, there's just not enough room for profit. Because the ATR is so small, I'm getting profit targets of 8 pips, 7 pips, and after spreads, commissions, that's just not worth taking. What I've noticed is now that patterns and setups and opportunities on the 60-minute chart, the hourly chart, which is usually the beginning of my swing trading, they're now getting the profit margins that I was getting on the day trading. So if I'm looking on the hourly chart, I'm getting target ones of 25 pips, stuff like that, while I'm getting nothing on the day trading. So I've kind of mixed both the swing trading and the day trading into just an intraday style of trading. And you guys probably don't care about that, but for you guys that have been following me for a while, you get what I'm saying. So I've kind of meshed the two, but it's gone well. Looking at my stats right now, and I say right now because, I was doing the number crunching yesterday, and I planned on not taking any trades today because of the ECB press conference, because of the trade balance number in Canada, the unemployment rate, non-farm payrolls, all of the fundamentals that came out today. I said, you know what, Akil? It's not going to be a trading day. I had one position left last night, which was taken out by the Aussie news, and I was all flat heading into this 4th of July holiday. However, today I noticed that there was a cipher pattern. I can actually bring this up to you. I'm down about 50 pips on it right now. There was a cipher pattern here on pound Aussie that I involved myself in simply because there was a much better risk reward. I actually missed the pattern, but there was a much better risk reward than what we originally expected. So I got into the trade about 70 pips less and made it, again, a very good risk reward ratio, especially for a cipher pattern completion, right up there somewhere. And I got involved somewhere at almost the very, very top around this area, I believe it was. Anyway, because that trade's still in progress and it's a much bigger stop loss than what I was accustomed to this month, that can have a major effect on my, not a major effect, but that could have a significant effect on my statistics going through. But so far, not counting that, because we don't know what's going to happen with that. We don't know if it's going to win or going to lose. Right now, I'm right where I usually am. I'm looking at my stats right now. I'm up about 2.24%, which is in line with where I like to be. Every month, I shoot for a goal of 3%. That's a number I like to see. If I could average 3% a month, that's going to be very, very good in the long run. So if I know if I'm between that 2 and 3% every month, I'm in a good place. I'm about 2.24 right now. Win percentage is a little higher than I expected. It's about 62%. Usually I'm about 55 to 60 max. So I'm a little bit above of what my usual win percentage is. And that's come from, a lot of that's come from the more, lost for words right now, how I've been managing my trades. I've been taking smaller profits, not being as aggressive with my profit taking, being a little more conservative. So no surprise there. That's bumped my win percentage up a little bit. With that being said, my average loss, and this is one of the red flags, my average loss this month was bigger than my average win. And that's big because, for me, risk reward is the biggest thing in my trading. That's major. Now, I'm not too fearful about that, mainly because, again, I've been combining the swing trading and the day trading together, and I had a couple of big losses on this very pair, Euro New Zealand, going back. I don't know where it was. I had a few losses up in this area for Euro New Zealand. I remember I took two back-to-back losers on the 240 chart, which were pretty big. So that's going to offset it a little bit, but still I want to see that cleaned up a little bit. I should have a much higher average reward than my average risk. But the one thing that I'm most proud about is my max drawdown. This month, my max drawdown has only been about 1.73%. I think it is 1.37, something like that. 1.73% of my max drawdown. And for me, that's something as a trader, that's been one of my goals ever since I started trading, to clean up. I've always had a bigger max drawdown than what I'd like, even back when I was managing money. And that's one of the reasons I got out of managing money. If you're going to go on to manage money, one of the key factors isn't how much profit you can bring in. It's what is that max drawdown? How much money are you losing? And mine has always been on the bigger side when it comes to money management, meaning that I would need to shrinken that up a little bit in order to make my portfolio look that much better if I was out trying to attract people to give me money to manage. I'm not. So in the past, I didn't really care because I didn't mind taking the risk with my own money. But it is something looking towards the future. If I do want to get back into that, I'm not going to teach forever. So if I do want to get back in that in the future, I need to get in the habit of having that maximum drawdown. So 1.73% is good for me. Of course, 1 month means nothing. I need to be consistent with that. If I can stay consistently within a very tight range of that, that's going to be great. And I want to become less streaky. In the past, I've been, 5 winners there, 4 losers, 6 winners, 3 losers, less streaky like that. But we'll see. But that was my biggest flaw as a trader. So it's something I've been working on. And again, we'll see how it goes. We'll see if this new conservative approach pays off and has a difference. I don't really like calling it a conservative approach because I've actually been more aggressive with my trades, just more conservative with my profit taking. So we'll see. Anyway, before I ramble on anymore, thank you guys for joining me. Hope you guys enjoyed this. Not as much on the charts, more numbers this week, but hey, I put out about 3 or 4 excellent videos in a row talking about technical analysis. So hey, I deserve a break, right? So take care, traders. Enjoy your 4th of July if you're over here in the States. Light some stuff on fire, blow some things up. It's the American way. And I will see you guys next week. Until then, plan your trade, trade your plan. Take care.